Yeah, hello traders. It's Akinworld Trading Institution, and this morning we're looking at the Euro Futures chart. And currently, I am on the 1 month time frame doing a top-down analysis on the technical aspects and also a bit of the fundamental aspect to know why the euro is dumping and the dollar is strengthening. Understand? So you would notice that when I move to the 3 month candle or time frame, you will notice that for the past, should I say, I don't call it 9 months now. If I'm counting this candle, it will be 9 months, but for the past 6 months, we've been ranging inside a supply zone. And whenever there is a fall downward, it is to say that the dollar is strengthening. You get, against the euro. There are other currencies that are strengthening against the euro, you see. And the major reason why we use, or the major reason why I use fundamental analysis to gauge or look at what is happening in areas like this is because whenever there is no fundamental backing to why a currency should dump, even when it is in a supply zone, it won't reverse. You get, it can be there for a while and range, then in fact just go past it and all. Look at everything that happened here. The market came into this demand zone, went up, came into this demand zone, went up, came into this demand zone, reversed up, came into the demand zone for years and all. But when there was enough fundamental reason for this market to dump, you understand, it actually did. You get, so a demand zone will always be sustained if there is no fundamental reasons to why the currency should dump below that amount. And a currency would, if there is a supply zone will continue to hold as long as there is fundamental reasons to why that price should be kept or maintained. You understand? So we are on the on 3 months candle, and when we move down to the monthly candle, like I always tell my students, I'm like, you don't overcomplicate the forex market. You don't overcomplicate the forex market. The price moves from zones to zones. Understand? Moves from what? One zone to another zone. Currently, we came into a supply area here, and that has been delaying the market or stopping the market for a while from rallying up. And now we are heading down again. So where possibly are we looking at this market to head to? You understand? Where is this market headed? Where is this market heading to? Now, this is where we tend to scale down to lower time frame to get a good supply zone, a good demand zone where the market will head to. And currently now we are having the market dropping downward. So we'll also look at where we can jump into the market or have a good sell, if you understand, in the market down to the demand area where we can, get more profit and all, or expect the market to reverse from, so that you wouldn't be trading with fear and all of these things and all. I know there's nothing that is 100% certain in the forex market, but for the information we are working with now, fundamentally and technically, this market is dumping and it will dump the more. You understand? So if we scale down to the weekly time frame, we'll be looking for a demand area. And firstly, I am seeing a demand area just right about here. right about here on the weekly chart. On the weekly chart, we have a demand zone right about here. We have a demand zone in this area. Okay, there is a demand zone around here, there is a demand zone around here, but firstly we'll be working with this demand zone, this demand area. Now for this market that is dumping, I want to sell this market into any of this area, into this area most especially. We are hoping that that fundamentals don't change till then. So if we are to narrow this chart downward the more, you would notice presently also on the daily time frame we are in a demand zone, but before that's not where I'm going to. It's very important that your chart is very neat, not rough and all. I used to like my chart to be very neat. Alright, so we are looking forward to selling into this demand zone. You understand? For selling into this demand zone before we look for more areas to sell from. And now presently the euro is in a demand area, but I want to let you understand something. You know, I told you earlier, I said that we were ranging in a monthly time frame, or within a monthly year supply zone. You know, we're ranging there for about 6 months before the market began to drop. You will notice that for the past few months, or even up to close to a year, the dollar hasn't been in high demand. You see, 70% of, or should I say 60% of the money that moves around in the forex markets daily are from what's called institutions. You understand? Big banks, institutions, and all of these people tend to push the money from one asset class probably to another asset class and all. So now, when a currency is not in demand, when they are not focused on a particular currency, when they are not focused on buying this guy for now, you will notice that that particular currency would not strengthen and would not rally. You understand? Even though it's in a supply zone, they don't buy a currency because it's in a supply zone. Sometimes geopolitical events, when you look at safe haven currencies and commodity currencies, safe haven currencies like Swiss franc, USD, Japanese yen, and all. So when you look at these three safe haven currency, you notice that they tend to gain strength whenever there is war. You understand? Whenever there is global uncertainty, they tend to strengthen. Why? It's because over time they've proven their resilience You understand? Whenever there is global uncertainties, that these guys, they don't drop in value. Their currency is always, you get, always up. You understand? They don't depreciate over time. Their currency don't depreciate anyhow. It strengthens. They've proven their strength as safe haven currencies. So yeah, they've proven their resilience whenever there is war, global uncertainties over time. So they've been selected as safe haven currencies. And when we look at the commodity currency, and where we have the Australian dollar, the New Zealand dollar, and the Canadian dollar, these are commodity currencies. When there is no chaos, when there is peace in the global economy, investors tend to spend more, you get, and they begin to buy other currency, invest in other businesses and all. But once there is geopolitical um, events or uncertainties, or so, investors would tend to safeguard their portfolio by saving their money. You understand? Safeguarding their portfolio so that they will not run into debt and all of these things. So by so doing, the safe haven currency will begin to strengthen above will be in more demand than the commodity currencies. Excuse me. Will be in more demand than the commodity currencies. And this leads us to risk on and risk off. Whenever there is risk on in the global economy, the term risk on is when investors are open to risk. You understand? They want to buy more currencies, so they want to invest in commodity currencies and all. But once there is risk off, everybody's putting their money in safe haven assets. And now when you look at what is happening currently, you would notice that from the previous GDP for the United States, yeah, when you look at their growth rate, the United States, you will notice that previously, I think in December, towards the end of December, they were reading 4.4%. I think they outperformed all the G7 currencies. You understand? They outperformed everyone. 4.4 was huge, and all. So now, due to governmental lockdown, 1.4%. Due to governmental lockdown that happened, I think in 2025. Yeah, due to the governmental lockdown that happened in 2025, you would notice that the data now came out to be 1.4 when what they were expecting was 3%. You see, came out to be 1.4. You get? Yeah, so due to the governmental lockdown that happened, it slowed down the United States GDP, their growth rate over time. So it dropped down to 1.4. But that is trying to tell you that is building up something. If they can grow up to 4.4, understand, in the previous months, and due to the governmental lockdown they dropped to 1.4, understand, it is to say that the economy is beginning to jerk back to life, and it's beginning to look attractive to investors. You understand? Forex is about sentiment. If you can follow the flow of where the money is going to, what the investors and institutions would be attracted to, then you can just keep buying when they are buying, you understand, and selling when they are selling. Don't be buying what they are selling and don't be selling what they are buying. You understand? So you don't want to be on the odd, because they are the big boys in the market, they are the big boys in the forex industry. So you want to do what they are doing. You want to be on their side. You don't want to trade against them. And by so doing, your market sentiment must align with theirs. You understand? There is a way to look at it from their own end. Okay, what currency should we be buying now? Look at what is happening in the Middle East, the war and all. So due to this internal drive that is internal growth that is happening to the United States and their data that is coming up, coupled with the that alone is already making the US dollar more juicy and attractive, and immediately the war happened in the Middle East, it gave people the push to push towards or to go for the safe haven assets or currencies. And US dollar is the reserve currency of the world. You get, so people are just rushing in, investors are just rushing in, okay, let's buy the dollar, let's buy the dollar. And by so doing, they are shifting their attention now from the euro back to the dollar. Back to the dollar. And by so doing, you would notice that when institutions begin to drop their long positions, their buy positions from a particular currency, just look for where, notice where they are taking the money to and be there. Understand? This is how to fundamentally follow what is happening and where the money is. Once you know where the money is, then you can make money in the forex market. It will be more easier for you to work with your technical analysis. I don't see the number of technical analysis you want to do. If you get a double bottom, you get a higher high and hold and all of those things, you get a demand zone, and the institutions are not buying us or respecting that that demand zone or your double bottom and all of those things that technical analysts use, you will notice that all of those things will just keep failing. But when you tend to trade alongside with the institutional sentiment, market sentiment, you will notice that everything you put into place, you understand, everything you put in place, like the dollar, sorry, like the higher high and the higher low, you will notice that they will not take out their own demand zone, because every demand zone in that particular currency are actually backed up by institutional buyings, you understand, or sales are actually backed up by institutional positions, you get. So by the time you are on the side of the institution and buying the currencies they are buying and all of these things, you will notice that every of their low, like every higher high, higher low that you see, every low there will be backed up by institutional buyings, you understand, institutions, and it will be very, very difficult for such lows to fade, you understand. So now this will increase your win rate, you get. So you don't just jump into the market and say, okay, now the Australian dollar is gaining strength and all. The Australian dollar has been buying for a while now, but let me stick to the euro dollar because that's what I'm analyzing here. So it would only take those who have fundamental understanding to know that we are currently in the risk off era. People are no longer risking their money. People want to safeguard their portfolio, and by so doing, the dollar will be in more demand than the euro. And notice that the dollar is gaining strength internally. You understand? Internally, the dollar is beginning to gain more strength internally already, before the geopolitical uncertainty, the war, and all of these things started. So it gives the dollar more hand to rally down to the downside and all. So now we don't want to, due to all of this information and all, we don't want to be buying the euro for now. Understand? We don't want to be buying the euro for now. what we want to be doing for now is to look for a good supply zone where we can, you know, sell from down into this demand area. And as we are selling into this demand area, we'll also be checking out for what the institutions are still doing. If their overall bias is still on a sell, that means we are pushing down to the next supply, to the next demand zone. And also by so doing, we look for a good supply area where we can, you know, sell from to make money. Currently, we are respecting this demand area, like I mentioned in my previous weekly outlook, where I said this demand zone is going to push this market back up and then down. So currently, would have a look at looking for a good supply area. I think we have one just right about here. There is an institutional supply area around here. So expecting that when the market rallies into this institutional supply, we want to get into the market from just around here, sell down. And you will notice that there was a demand zone that wasn't really expected around here. It has been broken by a candle body just right about here. So this zone has been violated. So it's supposed to serve as also a supply area. That is to say that this supply zone is covered by also this demand zone that has been broken. So when we move down to the 4-hour time frame to scale down this chart. Okay, looking for if you are to refine it, you can pick your cells from around here, I think this should be the extended version, if I may say, but this is the forex market. It can decide to reverse from here and also here, but this is the major zone. Understand where we want to look for a sell from. If I'm to refine this more tightly, I would shift this supply. So I'll shift this supply zone to this area. You get, shift it down to this area, and then so by so doing, if you can patiently wait for this market to rally into this area of supply. I think you can place your sales, if you have, and you should use a good risk management strategy. This is the area we are risking, right? And when we clone this, this is 1:1, 1:2. And so 1:3. Get, if this is actually a good trade. This is actually a good trade where you can just get your easy 1:3, easy 1:3, easy 1:3. So this is my outlook on the Euro index. This is my outlook on the Euro index. I didn't intend this video to be this long, but this is what we are seeing for now. So the market should, if you get a good sell area around here, you can hold this market down to this demand zone. You get down to this demand zone. This market is crashing all the way into this into this demand area, and if fundamentals still remain bearish over the Euro index, over the Euro futures chart, we'll keep selling down till when fundamental changes and gives us a reason to buy. All right, have a good trading week ahead. Yeah, why I use the, and lastly, why I use the Euro charts is because when you look at areas like this, on your Euro USD, you would notice that these particular areas did not really touch the market. You get, these zones did not really balance well with get into this demand area before reversing back. But the futures chart is has not been adulterated that much, so it tells us the truth, and that is why I analyze my charts using the Euro futures chart. You see, as you can see, these are the futures charts and all. Understand? So do have a blessed week, a blessed trading week ahead. Bye bye.